Well, look, not everybody is right all the time, and I think we have to acknowledge that we all have biases. And look, I'm a disciple of Buffett and Munger.
Hey everyone, and welcome back to Investing Guide. We're going to be discussing one of the biggest names in investing right now, Chamath Palihapitiya. What sets Mr. Palihapitiya apart from the rest is his method of investing and financing. The self-professed idolizer of the king of investing, Mr. Warren Buffett himself. It is hard to ignore the ability of Mr. Palihapitiya in being able to predict the future trends of the market and the historically savvy business decisions that have personally earned him a net worth in excess of $1 billion. Stick with us throughout this video as we filter through and present to you some of the hugest bets that Chamath Palihapitiya is currently working towards and whether or not they are set to pay off. Keep some notes close by because you will not want to miss out. So, what are some of his most incredible predictions? Was selling Facebook a bad move? Facebook stock is doing pretty well. I suppose it depends on where he chose to reinvest that wealth. Well, he picked Amazon and at a pretty good time as well. That's right, a few quarters before Amazon stock really started to take off and skyrocketed in value, Mr. Palihapitiya decided to wager that gamble. But you see, this is just the tip of the iceberg. Another incredibly intelligent but constantly overlooked move by Chamath was his investment in 2017 of 5-year convertible bonds in Tesla, in one of the safest and risk-averse means possible. Mr. Palihapitiya was able to support one of the leading entrepreneurs of our generation. Elon Musk has had an incredible financial year, nipping at the heels of Palihapitiya's other investment, of course, Jeff Bezos. And one cannot mention Chamath Palihapitiya without bringing up his unprecedented forecasting of Bitcoin. From as early as 2013, Chamath invested a whopping $5 million into the budding cryptocurrency. Sure, a fraction of its wealth, but at that point, Bitcoin was only $80 a coin. He's said to have owned up to around 5% of all Bitcoin in circulation at that point. But what about the big bets that you haven't exactly heard of? The shares that you could still get a good chunk in. The future Amazon and Facebooks and Bitcoins that Chamath Palihapitiya doesn't want you to hear about. Much like Warren Buffett, Mr. Palihapitiya likes to keep his personal investments as far off the public record as possible. Even when sifting through Social Capital's website, it is clear to see that a number of his investments are hidden through private firms and holding companies. But do not fear, we have done some serious digging and research and have some pretty presentable information on the biggest bets that Chamath Palihapitiya is currently taking. Number 4. Surveymonkey. Surveymonkey is one of those fantastic companies that is determined to blossom in the current world marketplace. It's an online survey platform that already has a pretty sizable market capitalization. It operates by giving businesses the tools to create targeted surveys for required demographics, and has reached around 100 of the Fortune 500 companies as of the moment. Currently, the largest sectors utilizing Surveymonkey and its services are the tech and higher education industry. Surveymonkey truly does provide an ever-growing field in which the value of big data is growing and growing at an alarming rate. And Chamath was fortunate enough to be at ground zero, operating as a venture capitalist through Social Capital in the early rounds of investments, from as early as 2013 until the company's IPO in 2018. Since his public offering, the share price has fluctuated through $10 to $20, but is currently on an uptrend at around $25 per share. Unfortunately, sitting with a price-to-sales ratio of 8.2 and earnings per share of negative 0.69. There is currently a negative profit of minus 26.35%, but that is set to change if Mr. Palihapitiya's forecasts are correct. Number 3. Opendoor. Opendoor's another exciting venture by Chamath Palihapitiya. This product aims to reinvent and revolutionize the real estate sector and the housing market through means of technological integration, basically simplifying the process of buying and selling homes through a digital medium. All of you property owners out there should be no stranger to the hassle and hidden costs that purchasing a house or land can bring. Fees upon fees, documents, legal proceedings, broker commissions, closing costs. The list is endless. Opendoor simplifies that process entirely, basically eradicating the need for real estate agents, offering a fixed 8% commission. The entire process will be wholly contactless. It's just a matter of uploading your home details, and Opendoor's complex AI will identify and accurately evaluate the cost of your home. The feature to have real agents value your property is also available. And finally, putting you in touch with potential buyers. As of the moment, Opendoor operates at around a 1% market share, leaving plenty of room to grow. It has been recorded a profit margin of 1.9 per home at this moment, so a clear sign of a highly profitable venture. The company's growth rate has only accelerated since its inception, and is estimated to have $9.8 billion in revenue by the end of 2023. As of late, the company's trading price is pushing $30 a share, with a market capitalization of about $12 billion. With a clear market advantage over its closest competitors, Zillow and Redfin, the company is valued pretty highly right now, and is definitely worth keeping a close eye on. Number 2. Clover Health. Clover Health's an interesting, data-driven health insurance startup that's aimed at easing the financial burden caused by the American healthcare system. Trading on the Nasdaq under the ticker CLOV, one of Chamath's most recent SPAC-assisted projects. The merger deal is set to close in early 2021, and we shall see Mr Palihapitiya's latest investment fly solo for the first time. This system used advanced algorithms in order to identify the cheapest and most appropriate Medicare Advantage plans for its users, offering highly tailor-made packages and services. The system is particularly revolutionary in the fact that it is also given to healthcare providers and aims to reduce healthcare costs through in-depth and thorough patient analysis. Unfortunately, the Medicare Advantage market is filled with competition, and Clover Health is yet to fully cover the American market, but is attempting to hold a market share through incredibly cheap plans, in an effort to collect more data and thus make the company more efficient in the future. The company debuted on the public market with a valuation of $3.7 billion and ended the trading day at a respectable $7 billion valuation. Although the company currently doesn't pay dividends and is surrounded by competition that consists of the largest healthcare insurers on the planet, the future looks grim for the company to stand on its own, but incredibly bright for it to be wholly purchased and absorbed by a competitor. Regardless of the company not paying dividends just yet, a net loss of $223 million across 2019 to a mere $20 million across the former half of the 2020 financial year bodes nothing but great signs for the budding company. So, as you can see from the above information, Chamath Palihapitiya certainly does have an extremely diverse set of huge investments in motion. From payouts in the short term to the long term, the prince of investing is certainly hedging his bets across a variety of sectors and industries. Number 1. Virgin Galactic. Virgin Galactic is a spaceflight company, and their mission is to develop commercial spacecrafts, and very soon they are aiming to provide space flights for space tourists and space science missions. The company has really big potential, and without any hesitation, this one is good for long-term investment. Their approach to business is similar to Tesla's. First of all, they are planning to have a high profit from high-margin space tourism flights, and then the prices will go low according to the market. Plus, they are planning to take part in high-speed traveling through a partnership with Rolls-Royce. It all looks like a great plan, especially their idea of making a super fast speed plane. It'll be able to go 3 times the speed of sound and will be able to accommodate almost 20 people. Moreover, the Virgin Space has already entered the Space Act agreement with NASA to promote the development of sustainable high-speed flights, and they already have necessary Federal Aviation Administration recourses to begin the outline to have a certification. It is important to say that Virgin Galactic has already completed the construction of their first spaceship, meaning that very soon they will be able to start their first flight. This is difficult to believe, but very soon people could have the chance to travel into space, and Richard Branson will be the first to accomplish this. As the space travel field is only just starting to grow, it's understandable why Chamath Palihapitiya invests in this company. Literally, it is a money-making machine, which already includes 900 participants who already paid $250,000 for each participant to tour space. But this is just the beginning. The media is already announcing that space tourism is going to be really popular among rich people. Many celebrities plan to take a tour of space. For example, Angelina Jolie, Tom Hanks, Lady Gaga, Leonardo DiCaprio, and many others. Moreover, Virgin Space has only one serious competitor in space tours, Blue Origin. But still, they have absolutely different methods and ideas, so Virgin Space is really unique on this market. The market cap of the company is $5.8 billion and is projected to go 1,820% of revenue in 2021. For how, this is difficult to tell, something about their PE and PS ratios. However, this is obvious that the company will grow massively in the future. Perhaps you should be too. While you're here, go ahead and click on one of these 2 videos on your screen. See you there.